Welcome back and take a look at the currency, which continues to stick in a very narrow range. The increased US dollar purchase ahead of the budget and the strengthening dollar index seem to be putting pressure onto the rupee. However, as the data shows that the rupee does tend to be uncertain and choppy ahead of budget, but tends to stabilize, even appreciate post-budget, is what the markets are right now betting on. Also get on board then Abhishek Goenka, who's founder and CEO at India Forex Advisors, and he joins us live on the show. Hi, welcome to the show, Abhishek. What's your sense really coming in for the rupee? Because it continues to be choppy. We haven't seen a direction really come in for this.
So we did some interesting observation on the dollar rupee, and we saw that over the last 10 years, just before the budget in the last 1 month, the rupee typically depreciates, and post budget the rupee appreciates. And this is out of 7 out of 10 years we have seen this kind of trend. So though historically this has been a trend, but of course in the budget, typically people would be looking at the fiscal consolidation of the plan of the government. What are they doing about the bad loans that's happening on the banking sector? What are they doing to attract and maintain the FIIs and the FDIs in the coming years? And of course on the infrastructure, what kind of spending they're planning to do. So I think some of the things which is closely watched. And if we see some kind of a surprise, because the optimism and the expectations are built in the government, so if there is some kind of an shock over there, then possibly the rupee could depreciate, and the trend that we have been seeing in the past few years could actually break down. So I think this is on the short-term effect, but post that, I think on the medium term, June is not very far, and then possibly the interest rates hike of the US, which is very much on the cards now because of the good data. That is something again the market is watching. So after budget, though we could see a move of 50-60 paisa here and there, but overall the medium term we could see a depreciating bias for the rupee, and possibly we could see levels of 63.5 going, because if this interest rate starts going up in the US and the oil prices, which has been down for a long time, also starts inching up, then possibly we could see a weaker rupee going forward. So I'm not looking at the rupee on a medium term to be below 61 levels. At the same time, on the higher end, possibly 63.5 is also possible, looking at 3 to 6 months horizon.
Vijay, what's your sense? How is the rupee looking on charts? Because we've seen constant declines coming in, not so much, but the direction really has been slightly negative.
Manisha, I would stick to my stand in the prompt month futures. Actually, now it would be better off in March. If in the March month futures on the currency derivative segment, if I was to get the USD INR at 61.90, I would be a glad buyer in the USD INR, because I'm expecting the USD INR to basically appreciate to the 62.45 and then 62.80 odd levels. And I would not really be surprised to see even the 63 levels being tested post-budget. So I'm a buyer on dips on the USD INR, and any kind of shorts at this point in time would seem a little premature.
All right, both our experts do expect the rupee to depreciate going ahead. But Abhishek, what's your sense really coming in from the budget? You did point out on the expectations, whether or not that could happen. But are you expecting it to be a big event? Do you see the markets really sitting back and taking a note of it?
Now, of course, it's a big event this time, and I think markets, as I said, they're pricing in a lot of good news in the market. Now, on the guard, on the GST, and especially what are they doing to, curb down the bad loans which is happening in the market, which is a big concern now. So I think people want to see the engine running now. If they don't see the engine running, possibly all the investors who have been putting in money in India, because of the cheap liquidity available, will take a relook at Indian markets. So I think it's a make or break budget, so I think people would be watching in, and we all will be very closely watching the markets to actually take a cues of it.
That's about the Indian markets, of course. Abhishek, what's your sense coming in from the international cues also? Because Yellen's statement today in the evening is going to be quite of importance. The US data has been on the mixed side, and people really are betting on whether it would be June or not. Having said that, there's lots happening in the Eurozone, Greece as well. So what's your sense on how much impact could rupee take in from that?
So I think if we talk about Greece, I think it has been lingering around for a long time now. They bought another 4 months of time. So I think it will be broadly in the range of 1.12 to 1.16. That's a broader range for the euro. I do expect a bounce coming in the euro sooner or later, maybe in the next 1 month to 3 months time horizon, because euro has beaten down a lot. So possibly a retracement is possible in the euro. I think that would be a good chance for all the exporters who have been waiting to cover euro against the INR. I think that's a good level, 1.16, and whatever the INR rate that time is. On the Yellen part, I think after today's meeting, I think she will be giving a stance on how likely and how soon we're going to see interest rates hike happening. So I think that's most likely. I think it's going to be June. That's mostly priced in the market. So I think the tone is going to make a difference. But broadly, I think dollar is likely to remain stronger in the current market scenario, and the dollar index hitting close to 100 levels or beyond, maybe in the next 3 to 6 months horizon. I think that's what we are looking at. So broadly, a dollar strength. Euro could give some kind of a correction, but then again, overall, I think the dollar is likely to remain strong in the coming 3 to 6 months time horizon.
Vijay, what's your sense? We almost touched 95, not really being there, but are you looking at a similar strength continuing here?
I think so, yes, Manisha. Yesterday we talked about 95.18 to 95.25 levels being reality on the US dollar index. And as we speak, the 94.28 as a support. I don't expect that support to be violated anytime soon, barring any fresh economic data point which is not out in the public domain. I think the dollar index is slowly but surely headed higher.
Any levels you would want to give at that? Because Abhishek talked about 100. Do you see that kind of a bullishness coming in?
Manisha, if interest rates in the US were to be hiked at some point in time, that would become a reality. So I think the US dollar index does hypothetically hold the potential to go into the triple-digit mark. Although I wouldn't expect that to be happening in a hurry, because linear extrapolation would be a fallacy here in this market. The kind of momentum that you've seen on the upside in the US dollar index will be fairly difficult to replicate. So the rally from here on might be a whole lot slower than what you have seen in the last 2 or 3 quarters.
Abhishek, a final question to you. What's your sense coming in for the bond yields then? Because at this point in time, we've seen some support on that. But do you see that continuing? Because there's a clear lack of appetite onto that one. How is this market getting into the budget mood?
I think the entire market is already priced in that there will be a 50 basis point cut at least this year for the interest rates. But now what we need to see is that the market is already priced in and the bond yields have fallen down drastically. So I don't see the bond yields going down too much. Another factor, what people will be looking at the borrowings program of the government post-budget. So if we're going to see some kind of an shock there, then again, I think the yields will start inching up because people are expecting too much that the fiscal thing will bring into control. So I think these two things is what. So I don't expect the bond yields to go down drastically. I would rather expect some correction happening on the bond yields from the current levels.
All right, so that really is the view coming in for the currency and the bond market. But with that, Abhishek and Vijay, we will let you go. Thank you so much for coming by and explaining the sector to us. And with that, completely out of time on Hot Commodities. Thank you for watching.